afternoon from the For the CB. This is Chris Robinson with your Trader's Exclusive comment for today, Wednesday the 13th. Well, we survived the USDA report yesterday in the grains. The big surprise was most of the analysts, the experts, had anticipated that they were going to lower yields for corn and beans. Lo and behold, the USDA actually raised the per acre yield for corn and beans by about a half bushel apiece. The initial reaction was very negative. If you pull up a 5-minute chart, corn, wheat, and beans just fell through a trap door at around 11 o'clock when that number came out. The good thing is, if you're a producer or if you're leaning more towards the bullish side, we actually came back and settled very, very well. Ironically, we were led up by wheat. Usually wheat is the kind of the follower, not the leader. But if you look at the December Chicago wheat, it made a new low and turned around and moved higher. Pretty good action. Some people are trying to call it a low. I learned a long time ago that it can be dangerous to try and pick bottoms and puff your chest out and say this is the bottom. It may be in. If I'm a producer or a speculator, I'm gonna look closely at the recent low from yesterday as sort of a line in the sand. So moving forward, the one good thing about these reports is that they crystallize everybody's opinion, bullish or bearish, whatever you think of the USDA. The price discovery is what's most important. And price discovery is telling you that for now, the market's a little bit oversold. We've had a good rebound higher. Soybeans had a 30-cent trading range yesterday. They're higher again today. I'm very concerned about how we settle on the week. Experience has shown that lots of times we'll get a report on a Tuesday. It takes a couple of days for everybody to get their ducks lined up in a row. And I think Friday's settlement is going to be very telling as far as if we can extend the rally higher. Markets are very oversold. You've heard me talk about it a while. Corn's near a 2-year low. Wheat near a 10-year low. So the markets are oversold. It's primed for a rally. And the action that we've seen after a very bearish USDA report is actually, I'd say, on the positive side. Can we extend it? Can we get some follow through? That's going to be what we're all going to be watching the next 2 to 3 days. Very quickly, before I leave, pull up a chart of cotton. December cotton. You want to see speculation run amok. Cotton rallied $10 in about 4 days with the concern about what was going on with both the hurricanes. It really picked up when Irma was supposed to be a much bigger storm than it turned out to be. The idea was that if that storm came all the way up, it would really do some damage to our cotton producing areas, more so than it was already done from the first hurricane. Long story short, the managed money, always talk about that. Managed money bought about 30,000 contracts last week, huge buyers. And lo and behold, we came in on the weekend and the storm wasn't as bad as it was. So everybody was caught long. The market, after rallying about $10, has dropped $7 in 2 or 3 days here. We bottomed out this morning. It just goes to show you how these markets can move very, very quickly on speculation. That cotton market can be very dangerous if you're not disciplined. They don't call it a widowmaker for nothing. With volatility, though, comes opportunity. The key is, when you're wrong, you've got to be willing to say, I'm wrong, I got to get out. Because if you're not, you can really get run over. And if you don't believe me, just look at the whipsaw in that chart. From a $10 rally to a $7 collapse in the space of about 10 trading days. If you're looking for help with your hedging, speculating, what have you, give me a call. Chris Robinson. Have a great day.